trade worries, expanding trade and current account deficits. July provisional trade Anantim Vyapar data should trigger early warning signals among policymakers, as the first year-on-year contraction Sikuran in exports in 17 months, albeit marginal, Halanki Seemant, and a 44% jump in imports, sharply widened Teji se chauda the trade deficit Vyapar Ghata to a third successive, Lagatar Tisra monthly record. The export performance is of concern Chinta reflecting Darshati a slowdown in overseas Videshi demand for Indian merchandise Vyapar the competitive advantage gained by the rupee's sizable depreciation Mulyahras against the US dollar notwithstanding Wabjud. While the Commerce Ministry has sought to Karne ki maan ki explain away the 0.8% slide in last month's exports as largely being a result of inflation control Mudrasfiti Niyantran curbs, the ministry's preliminary disaggregated alag-alag data suggests several key sectors including engineering goods, gems and jewelry, garments and yarn and textiles, and drugs and pharmaceuticals, which were mostly outside the purview paridhi of those measures, also suffered contractions Sankuchan ka samna karna pada. And viewed on a sequential basis Anukramik Aadhar, the slide in exports from June's level is a disconcerting Chintajanak 12.2%. Engineering goods, which at more than 26% represented the largest share of merchandise shipped overseas in July, contracted 2.5% from a year earlier and also shrank Sikur Gaya 2.9% sequentially Kramik Roop se. Even granting that the government's introduction in late May of a stiff export tax on a range of steel products, with a view to boosting their domestic availability and cooling price gains, was likely to have constrained vivash exports of this segment of engineering goods, the contraction in the broad category points to a clear slowdown in demand in the advanced economies. The latest S&P Global PMI data from the US and the Eurozone for economic activity in July is also far from reassuring Ashwast. As per the PMI data, output across Europe's major economies sharing the euro as common currency shrank for the first time since February 2021 as a worsening bigarti manufacturing downturn Vinirman Mandi combined with a slowdown in the service sector to drag the composite index into contraction territory Sankuchan Kshetra. The US economy, which has now contracted for 2 successive quarters putting it on the edge of a recession, Mandi ke kinare, saw manufacturing PMI post its lowest reading in 2 years as output and new orders declined in July. Given that the US and the Eurozone combined consumed almost a third of India's goods exports in the last fiscal year, the prospect Sambhavna of Julie's export slowdown deepening Majboot banane as demand in these markets weakens appears increasingly more likely. Imports continued to expand at a robust clip, driven largely by the expanding domestic demand for essentials including crude oil, coal, edible oils and electronic items. Coal and coke alone exceeded $5.1 billion. The augury Bhavishyavani from the trade data is that the external sector faces increasing vulnerability Bhedyata, as the burgeoning Teji se badhte trade deficit is set to swell the current account deficit, adding pressure on the rupee at a time when portfolio investments from overseas have been negative, and foreign direct investment Pratyaksh Videshi Nivesh has been significantly kafi weaker.